Hi, welcome, welcome, welcome. If you're new to me, I'm Audrey Faust. I'm a financial coach and I work with women through my Financially Empowered Sisterhood program, where I teach women how to create a path to prosperity with personal financial coaching. And I work one-on-one with women business owners and teach them how to create a path to profitability. And one of the questions I often get from my women business owners is about whether or either how can I save on taxes because I'm paying way too much in taxes, or when should I convert to an S Corp if I'm an LLC? So there are lots of schools of thought about the converting to the S Corp for an LLC. But what I like to teach is, first of all, you should have a really good profit. Your profit would need to be over 50,000. And your profit is your income minus all of your expenses. That's your net profit. So your net profit, if you want to think about converting to an S Corp, and in turn, that's going to save you in taxes, is at least $50,000 of net profit. And I'm not I've done taxes. I'm not a tax advisor. I understand taxes. I've done them, but I don't actually stay current with all of the tax laws anymore because I don't do tax returns. So I advise you to talk to your tax advisor who does your tax return. But in most cases, you would need at least $50,000 to $70,000 net profit for it to make sense for you to start filing as an S Corp. And why does filing as an S Corp save you in taxes? Well, because you get to take some of your money out in payroll. So, but not all of it. So when you're filing as a sole proprietor, so if you're not designated, if you're an LLC and you're not designated as an S Corp, you're filing as a sole proprietor. When you're filing as a sole proprietor, you will be paying tax on all of your net profit. So if you are making $50,000 in net profit, you're going to pay Social Security and Medicare, and that's 15% because you're paying for yourself plus your company. Federal tax, local tax, if you have local tax. So all of that could be up to like 40%, depending on your tax bracket. And here's where an S Corp is different. So with an S Corp, you will get a paycheck just as if you were working at a job. But you don't have to take all your net profit through the paycheck. So what you get to do is take a portion of your net profit through the paycheck. And usually your tax advisor will tell you a good number to take out. In the past, I've talked with different CPAs and they all have their different ideas of how much you should take. And it depends on your line of work. It depends on your business, but typically it's around 50%. Some of the CPAs I've spoken with say 50%, take 50% in salary, in paycheck, and then 50% comes out in distributions. So this would be as if when you were a sole proprietor and you're just pulling money out of your business, you're just kind of pulling it out. You're not getting a paycheck. You're taking money out of your business and using it for your personal expenses. And that was taxed at the highest rate, okay, before you were filing as an S Corp. Now, when you file as an S Corp, the only thing that's being taxed at the highest rate is your paycheck. the money that you pull out. So if you go 50-50, I said $50,000 as an example. 50% of that is taxed at that high rate because it's your paycheck. But then the second 50%, what I call the distributions, is all, you don't have to pay Social Security and Medicare tax on that portion, which means you're saving 15% taxes on that portion. Now, I know what you might be thinking, well, why don't I just do that if I'm making $25,000 net profit? Because there's other expenses that go with it, such as you're going to have unemployment tax potentially, depending on what state you're in. Again, that's minimal. You're going to have to pay to run a payroll, which is going to cost you. You're going to have to potentially pay more to get your tax return done. So there's all kinds of things you need to factor in to decide whether or not an S Corp is the right way to go. But until you're making at least $50,000 in net profit, in my opinion, I wouldn't even approach your tax consultant or your tax preparer with this question. And if you are making over $50,000, I hope you're working with a licensed professional that has a CPA and can answer these difficult questions for you and actually really help you save in taxes. Because you don't know what you don't know. And oftentimes if you're going to tax preparer that's not at the CPA level, they're not familiar with all the tax laws. CPAs are required to do training every year in order to keep up with those laws. So a little bit of advice there too, but I just wanted to share that with you. If you want to get on a call and chat more about it, again, I'm not a tax advisor, but I can help you look at your income and look at what you have to see if maybe if you are in a good place to start talking to somebody about switching over from a sole proprietor into an S Corp in your business. Thanks. And I appreciate